Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 28th of September. All right, now the dollar slightly higher. The durable goods, US durable goods numbers came in slightly better than the forecast. I'll just bring you over to that just to make sure you know why things are slightly higher. Okay, so the market, there was a pretty big range for this data, but came out at 0.2. The consensus was for a minus 0.5, right? So slightly better numbers, you get a slightly stronger dollar. And the yields, right over here, the US Treasury yields, they are the sort of component you want to keep an eye on, because every time they go up, you see the dollar slightly climb, right? The dollar index, just on the short-term stuff, obviously higher up here, but see how it's not racing away? The market just doesn't know what to do at these levels, right? There's no like clear level to get in and you hold the position, right? When you get into a position, you're thinking, where do I get out? Right? If you're getting long dollar Swiss here, ideally you want to be out down here, but you know, it's 180, 200 points away. So that makes it confusing when to hold positions, when not to. The best time when the markets are trending like this is to be jumping into the positions, maybe short term, around the economic data releases, right? And those durable goods numbers work with a stronger dollar, okay? But there's one thing, there's a couple of things happening here that you can see, right? The yields are slightly higher, right? Only a fraction, but it's enough to keep things moving. Look at the equity markets here, right? The Dow Jones, the S&P, and the NASDAQ. See, they've had that like big final push to the downside. Now, I don't think, I'm not necessarily saying the move's over. If we get like a really big top tier US number that's strong, well, these markets are going to really take off again. But right now, it's showing signs of consolidation on the most sensitive markets, right? The equity indices. So they are sort of sitting there. You can see the capitulation here of obviously gold, oil's gone through the roof. That's going to add the whole inflation story. Euro on its lows and Euro slightly climbing higher. So we've got markets here that if you look at we'll come back to the daily charts, the longer term levels, right? We can see very clearly what's happening, right? As I said, if you get a top tier US number, these things are going to keep moving in the same direction they are. But if we start to see the numbers turn, it's going to be a super aggressive move, right? And that's what we want to start to try and anticipate when that could happen. Now, there's rumblings about the US government shutdown, right? That can slowly lead into something. If anything, in the past, it hasn't been a big event at all, which is a bit of a surprise to most people. But if it drags on for 2 or 3 weeks and everything's shut, well, then it's one of two things, right? The dollar could react and go up as a safe haven, or if they downgrade the US credit rating, well, that could impact the value of the treasuries, and that could see a dollar sell-off, right? So we'll see how that goes. Dollar CAD sideways, Kiwi and Aussie just following Euro and Sterling down. So like, it's not exactly plain sailing. This isn't like, even when you get these big trends, right, it's not easy to trade because you don't have all these short-term trend lines to work with. So today I'll be looking very closely at the various numbers coming out. We have clear direction. Fighting the direction on some of these currencies is problematic because you've got that strong dollar. So the Kiwi, the business confidence numbers, they can move things. Retail sales in Australia. There's some sort of echo summit in the EU, German inflation numbers. And then you've got a whole bunch of US data coming out here, right? So the jobless claims, I'd be very interested to see how that impacts. Pending home sales, well, we've got all the rest of the home sales data. That will be interesting, right? Previous minus 14. Like, there's some numbers in the US that are strong. Then there's all the like consumer confidence. Some of the housing numbers, they are capitulating, right? So there's a big mismatch of the data, and it's a telling sign because this week we got a lot of second, third tier numbers, and we're waiting to see if it does impact the overall sentiment of the central banks, because we start to see things fall here, then it changes the big long-term picture, right? So anyway, that's what we've got today. There's a bunch of things. I think North American session is probably the best, but there are some things happening in the European session. So keep an eye out for that. And then you've got a whole bunch of numbers coming out Friday as well. But just work with the trends. They are your friends. And keep an eye on, the whole profile of the market, right? Daily change here. We've got a bit of a risk on profile in the market. It's not translating at the moment across into the majors. So don't just sort of run straight in. The yen, well, it continues to go up. Kiwi down, Aussie down, sterling down. And those treasuries, keep an eye on that through that North American session, especially after data is released. That's when you'll see the treasuries move, and that'll have a flow-on effect into the equity markets, and that can flow into the dollar against all the majors, right? That's how you piece this together. All right, guys, have a good one. All the best. Cheerio.